Hello, everyone. Welcome back to our Office of Housing Counseling Community Conference. We're having a great start to the day today, and you're now joining us for our session, New and Trending Policy and Research Impacting HCAs. Before we get started, I just wanted to share a few reminders about the Cvent platform, which we're using for you to view the sessions live today. Through Cvent, you can network with attendees through our community boards and using in-app messages, access the schedule, session materials, and resources, explore speaker profiles and attendees, use the live Q&A functionality for each session, connect with conference partners, and earn points and place on the game leaderboard. After each of the sessions have run, you'll also be able to access recordings located under the schedule on demand. For this session, you can ask questions using the live Q&A functionality. If we do not have time to answer all of your questions before the end of the session today, you can also participate using one of the community boards that's been set up for the duration of the conference, such as David's Corner, where we're paying attention to all the questions that are coming in. I'll now hand it over to David Berenbaum, Deputy Assistant Secretary of the Office of Housing Counseling, to introduce our esteemed speakers today.
Thanks so much, Lindsay, and welcome back, everyone. Good afternoon. This is, I think, one of the conference favorites. Each year, the information, the research, the policy discussions that this group of panelists have is always rated among the highest at our virtual conference. And I'll add, it is definitely one of my favorites as well. This year, our conversation will kick off with a presentation from the Harvard Joint Center for Housing Studies, and then be followed by a terrific panel discussion, really celebrating some great industry subject matter experts and colleagues that will highlight the latest data in the field, and as well acknowledge, discuss, and engage with regard to key factors facing our mortgage markets, our housing affordability, both rental and home ownership, as well as how this all impacts the work we do in the housing counseling community. Let me take a moment to introduce our colleagues who will be part of the panel. First, Chris Herbert, who is the Managing Director at the Joint Center, will present a slide presentation and walk us through some of the really strong data points that they have researched and shared with all of the housing finance, real estate, and all of the stakeholders in the community who follow the Joint Center. We have our colleague and friend, Dr. Courtney Johnson-Rose, who is president of the National Association of Real Estate Brokers, joining us. HUD is actively involved with her organization and trying to promote home ownership to bridge the home ownership gap. Jason Riviero, the executive director and COO of the National Association of Hispanic Real Estate Professionals, is joining us. They do their own research, which is something our office relies on, something that we use in our Make Home the Goal efforts as well. Wendy Penn, the Associate Vice President for Affordable Housing Initiatives at the Mortgage Bankers Association, also a partner and colleague in all of our collective efforts. And then our friend Ellie Pepper, the Deputy Director of the National Housing Resource Center. Before I turn things over to Chris, I do want to share some exciting news with you. First, and most significantly, I want to share with you a very significant procurement development for our office. As you know, we've been looking for innovative ways to really promote the impact of our work together. The Office of Housing Counseling, through HUD's procurement process, has entered into a contract with KPMG. And they are going to inform our forecasting and future priorities. In fact, KPMG, with all of your input as well, is going to conduct research and help us to develop an approach to forecast and estimate demand for our services, to focus in on service delivery and levels and outcomes, and more importantly, the broader impacts associated with our housing counseling services. This will serve to document, buttress, as well as inform our work and how we engage collectively together with all of our partners and stakeholders moving forward. Having strong forecasting, having strong data will drive our activities, coupled with the information that we receive from you working on the front lines, working directly in our consumers, with our consumers in every community. So we look forward to sharing more information about this development with you in the coming weeks. And Chris, let me turn things over to you to kick things off. Thank you so much.
Thank you, David. It's terrific to be here with you. The folks doing housing counseling are near and dear to my heart, so this is an event I'm always very happy to participate in. So let me kick us off. I want to give some trends in the housing market that are really affecting the work you all are doing. What I like to do is start off by giving you a high-level overview of the main points I want to make, and then I'll drill down into some data to really make these points come home. So the 5 points I really wanted you to take away with are, one is that the spike in interest rates that we've had over the last few years on top of record home prices has really greatly eroded first-time home buyer affordability. I know that's not news to this group, but let me drill into some data just to make that really drive home exactly how much that's impacting would-be first-time home buyers. Secondly, one of the things we're really seeing in this market is that house prices relative to incomes are at record highs. And one thing that does is really put a premium on down payment assistance because of the fact that when you have home prices that much more of a multiple of your income, the ability to save that down payment becomes really critically important. I also just want to highlight the fact that recent gains in BIPOC home ownership that we've seen over the last couple of years have started to stall and will be really hard to sustain in the current market condition. So if we're really going to make progress in closing the enormous gaps that exist, particularly between Black and Hispanic and white homeowners, we're going to need really concerted efforts to address the challenges folks face. I also want to just briefly touch upon the fact that existing homeowners are facing increasing cost burdens as pressure from property taxes and insurance rise. And then lastly, talk about housing supply, both existing and new homes, and how that's really limiting opportunities. We sometimes get accused of being the joint center for doom and gloom, and there's a lot in here that shows what a difficult market we're facing. But I think the conversation we'll have after my presentation really can help illuminate some of the opportunities that might be existing and some of the reasons for optimism as well. So let me start with some of the data. On this slide, I'm showing you trends in 3 key metrics. One is the top line there is home prices. The middle line is the payment on a median priced home, and the bottom line is interest rates. And all of these are indexed back to where they stood in 1990 to show you the relative movement in these things. The key point here is if you look at that orange line, the top line, home prices are now about as high as they've ever been. We hit a record high right coming out of the pandemic. Prices dipped a bit at first after interest rates rose, and then they've started to go back up. So house prices are at really, really high levels. If you look at the bottom line, that interest rate line, what we saw was that from 1990 through the pandemic, we had a really long-term sustained drop in interest rates from what had been in the low teens in 1990 down to under 3% in 2021. The fact that interest rates were so low helped to both accommodate and in many respects drive those price increases that we saw. So if you look at that blue line, what was the median payment on the payment on the median priced home in the country? You can see that in the early years of the pandemic that level was about 100. It really was about as affordable as it was back in the early 1990s. And so that low interest rates really allowed those high home prices to not have much of an effect. But with the spike in interest rates, the way that black line has gone up, and the fact that house prices have stayed high, we are now at a point where affordability for homes is worse than it's been in decades. On the next slide, this is just to illustrate the kind of the basic math behind qualifying for a mortgage. So the top line shows you the median home price, you have the interest rate, what that implies about down payment and closing costs, what the total monthly cost is for a homeowner, and the income you need to qualify for that. And lastly, how many renters are going to cross that line. So one thing to note here is the top line you can see is that house price growth had slowed for a while. It's now back up, now going back up. And if you look at the impact on the interest rates, the amount of income you needed to qualify went from $97,000 in March of 2022 to almost $130,000 in September of 23. That increase in how much money you needed to qualify for the median price home meant that we went from having 8.8 million renters who had enough income to buy down to 4.9 million, almost cutting in half the number of renters who could qualify to buy. Now, if we extended this chart to today, what we'll find is that interest rates are now down into the low sixes. That's the good news. The bad news is home prices have continued to edge up, so that the income you need to qualify is back around $117,000. So there's been some improvement, but right now every little bit we get back with interest rates declines so far being captured in rising house prices. And so I think what that means is we're really looking at a period of where affordability is going to be challenging for some time to come. Now, I mentioned in my opening remarks, on this next slide, we'll look at the price to income ratio. So that's the ratio of home prices to incomes. And the line is showing you what that level is for the nation as a whole. And then the bars are showing you the numbers of markets falling into different categories: under 3, 3 to 4, 4 to 5, and 5 and over for the top 100 markets in the US. You can see for a long time that ratio was about 3. And so 3 times income was the kind of rule of thumb what housing costs would be. During the housing bubble, it went up as much as 5 and then came back down as house prices deflated post-bubble. You can look at the distribution of markets that we had back in 1990. We had 2/3 or 3/4 of markets had a ratio of 3 or less. So most of the country was in that 3 times income ratio. Fast forward over to the right-hand side to where we are today. We're back up at a national ratio of about 5. We're now at a point where almost 3/4 of markets in the country have a ratio of 4 or higher, and about a third have ratios of 5 or higher. And when you have incomes that are that much a multiple of home prices, then you really have, or home prices that much of a multiple of prices, you have just a real challenging time for people to save for a down payment. And it's really astounding if you look at that on the right-hand side. There is now one market in the country where prices are only 3 times income, as opposed to 2/3 of the country. So this issue of high house prices relative to income, which had been kind of a coastal issue, has now become really widespread throughout the country. And we look at the next slide. And this is in the context of really large and substantial and really sustained gaps in homeownership rates between people of color and white households. On the left-hand side, you see the trends over time, and you can see beginning about 2016, homeownership rates, which had been trending down for a decade, started to move back up. And some of those gains were actually more significant, particularly for Hispanics. Hispanics have been an important part of the home buying market, but even for African Americans, homeownership rates had edged up. But if you look at the right-hand side, the gains have only been modest relative to whites. So we still had, as of 2023, nearly a 29 percentage point gap between blacks and whites, and a 25 percentage point gaps of Hispanics and whites, and 16% for all other races. So in a period where home ownership is becoming that much more unaffordable, we're really locking in some sense, these historically substantial gaps in home ownership opportunities by race. So if we put this together, in fact, we have these huge gaps. How do we try to close them? And the fact that price to incomes are so high and the need for that down payment is so substantial. The chart I showed you earlier showed that you need about $25,000 in cash for a low down payment mortgage and closing costs to buy a home. Few renters have that. The Joint Center did some analysis saying, okay, if we did have a $25,000 down payment program available to first-time home buyers, to first-generation home buyers, however we wanted to target it, how much would that help Black and Hispanic households to be able to buy a home? So what we did was we looked in, based on the market folks lived in, what was the cost of a modest priced home in that market, and how many Black and Hispanic renters had sufficient incomes to be able to purchase that home. And then with the help of that $25,000 in down payment assistance to give that cash at closing that's needed, how many could then afford to buy a home? And this chart shows you the results. What's interesting is that the folks under 50% of AMI, they're just not close enough to be able to afford that home to really have any meaningful increase in home ownership for that group. A small increase for those between 50 and 80% of I, and even 80 to 100% of AMI. And it's not until you get above 120% of AMI that you really start reading meaningful numbers of households. So I think for policymakers, we like to make this point to make it clear that as you think about income targeting down payment assistance, You really, if you want to expand opportunities for BIPOC households, you need to be generous in terms of what income categories that can be applied to, because the folks who have the income needed to buy a home are the ones at the higher income levels, but they still don't have the cash. So I think that's just something that Kamala Harris's proposal for $25,000 in down payment assistance. This is the kind of information I think they need to incorporate into thinking about how do you target that. All right, a couple other things I want to touch on. One is existing homeowners. So this is showing you the number of existing homeowners who are cost burdened, spending either more than 30% of income on housing or more than 50% severely cost burdened. For a long period of time, the number of homeowner households that were cost burdened has been coming down. It declined from the time of the housing bust in the late aughts and has came down to decline pretty steadily through 2019. What's happened since? We've seen over the last couple of years a big increase in the number of homeowners, existing homeowners who are cost burdened. And if we drill into that trend more specifically, what we'd see is that much of that increase is concentrated on homeowners making less than $30,000 a year. Now, that seems like a pretty low income for folks to be actual homeowners, but people get in earlier in life. They may be older. They may have inherited a house. But those folks are really becoming increasingly stressed as homeowners. And as we look at it, a lot of it has to do with rising property taxes. This big increase in housing values has driven up property tax bills and insurance costs. And so I think as we look forward, we can't lose sight of the fact that getting people into homes is only part of the story. We have to keep people in homes, and we're seeing more distress on the existing homeowner side, particularly among low-income homeowners. A couple last things on supply that I want to touch on. One is this is showing you the number of existing homes for sale over time, and then the line is the month supply, given the rate at which homes are selling, how many months supply we have. I'm sure many of you heard the old axiom that a 6-month supply of homes is a normally balanced market. You can see that was roughly what prevailed for much of the period up until about 2013. And if you correlate changes in house prices with that month supply, you'll find that once you get below 6-month supply, there's upward pressure on prices. So we've been seeing upward pressure on prices for much of the last decade. And you can see during the pandemic, we've got down to under 2-month supply of homes. If you look at recently, we've seen the supply of homes inch up. You hear the headline saying inventory of new homes is up X% last month. This is X% up from historic lows. We have a very tight existing home market. At this month's supply, we're keeping upward pressure on prices. And with interest rates today above 6%, and the vast majority of existing homeowners sitting on mortgages under 4%, this is a condition that's going to continue for a while as well. And then just this last slide. So then what we're going to be turning to is the supply of new houses as a way to meet that demand for entry-level homes. But we've been really struggling as a country to do that. Here, this is showing you the trends in certain segments of the new construction market. That top line is the number of homes over 1,800 square feet. A decent sized home, but more than a typical starter home. And if you look at what's happened since 2010, almost all of the increase in single family production has been among those larger homes. That orange line is homes under 1,800 square feet. You can see back in the early part of this century, we were building about 500,000 units a year of small under 1,800 square foot homes. And we've struggled to have that number come back up above 200,000. Meanwhile, condos, the green line, and manufactured homes, other forms of modest entry-level housing, have also stayed very low and failed to rebound. So as we think about how are we going to create opportunities for first-time home buyers, particularly BIPOC homeowners, in a market where house prices are such a big multiple of incomes, we've got to find ways to build smaller, simpler, more affordable housing. And so the supply side is a big part of the equation here as well. All right, I threw a lot at you, but hopefully I've given a lot of information that the panel that we'll now hear from can start to tell the story of how they are seeing conditions in their community. So I'll turn it back over to, is it Karen that will be leading us?
Yes.
Karen, over to you.
Thank you so much, Chris. That was really great information. So hello, everyone. My name is Karen Hoskins. I'm part of the ICF team, and I'll be moderating the rest of this session as we take a closer look at the trends that Chris shared. Our other guests today bring a variety of perspectives to this conversation, and we want to get their reactions to the data that has been presented. First, Dr. Courtney Johnson Rose from NAREB is here. It's great to see you, Dr. Rose.
Yes, same to you, Karen.
NAREB focuses on strengthening Black, minority, and emerging market segments that your Realtus members serve. So using that lens, what stood out most for you from Chris's presentation?
Thank you so much, Karen, for that question. And on behalf of NAREB, I want to thank Acting Secretary Todman and Deputy Assistant Secretary David Bourbon for the opportunity for NAREB to participate today. So Karen, Chris's data and observations is very consistent with the NAREB State of Housing in Black America report, which we produce on a year-to-year basis. Our report is an extraordinary collection of data that chronicles the progress that Black Americans are making in homeownership and wealth building. Our SHEBA report has indicated, similar to what Chris shared, that inventory creation is the #1 impediment to Black homeownership. But I also want to add the #2 impediment to Black homeownership is actually Black consumer confidence. And we'll talk a little bit about that. As you all know, and Chris definitely articulated, there's just not enough homes being built in America now to manage the demand for housing. At NAREB, we believe that more housing has to be created, but we need to think of housing in a more creative way. Co-ops, multi-generational homes, tiny homes are things that can help increase the housing stock faster. We also have a very concerted effort on how do we get institutionalized investors out of our market. We are experiencing in major markets like the one I live in Houston that almost 20 to 25% of home sales last year went to institutionalized investors, large real estate investment trusts and funds, and that is taking needed inventory out of the housing stock in communities of color in particular. We also see renovation as a key to increasing housing supply. NAREB has recently created the NAREB Black Developers Academy, a transformative initiative designed to address the pressing need for increased inventory and designed to help scale emerging developers in being able to go into communities of color and develop infill lots and renovate blighted homes and bring them up to living standards and up to energy efficiency standards. So we think that renovation is a big way that we can help increase housing stock quickly. The other major impediment that I'll mention also too, Karen, quickly, is on Black consumer confidence. So when you listen to a presentation like what Chris just gave, you start to think the odds are stacked against you. How am I, as a first-time home buyer, first-generation home buyer many times in our community, going to be able to purchase a home? So what we have experienced is sticker shock in the Black community. We've experienced discouragement in the Black community and Black consumers being overwhelmed by the process between the new changes in buyer's agency and the need for, on average, for $25,000 to buy your first home. It can be a very daunting and overwhelming process for Black consumers. And we have seen this. Black millennial mortgage applications are down, according to our State of Housing Black America report, by 27% year to date. So we're losing that population that should be buying. In Black millennials, they do not have the confidence to go out to purchase real estate. So we have designed the NAREB Building Black Wealth Tour. Our tour was strategically designed based upon the data of the SHEBA report to penetrate into Black communities. We do that through several MOU partnerships with Black Greek organizations, with Black churches, with Black mayors, to be able to reach into our communities to create free events that include housing counseling through our NID Housing Counseling Agency, that includes courses throughout the day, that includes one-on-one sessions that are designed strategically to educate, but also to, Karen, to motivate our community to continue to buy real estate. Our tour is continuing. We have another 105 stops scheduled for cities all across America, strategically focused on motivating the Black community. to purchase real estate.
That's awesome, Dr. Rose. Thank you so much for
Thank you.
sharing. Appreciate that. And next we have Jason Rivero from NAREP. He's also here. Jason, thank you so much for joining this conversation. NAREP's mission is to advance sustainable Hispanic home ownership. So based on Chris's data, what do you think are some of the impacts for Hispanic home buyers?
Thank you, Karen, and of course, thank you to the entire team at HUD for continuing to allow us a forum to share the the opportunities, but also the challenges, as Dr. Rose has mentioned, within our communities. I think Chris's data is certainly a sobering reminder of the issues that we face ongoing. And I really admire everybody on this call, because I think you are doing the most important work every day. It's been amazing, I think, to see, the positive trends in the demand. So we know the demand is there. We know that people are really working hard to get to a place to where they can qualify, but it seems as if that finish line keeps getting moved for everybody, and this year specifically, I think we're hitting that roadblock even harder than ever before. So just to put that in perspective, we're coming off of nearly, over 9 years of continuous growth for the Latino community when it comes to home ownership. And really, in essence, it was just kind of making up for the gains that we had prior to the recession, right? And all the gains that we had as a result, or the drops that we had during the recession itself. So we're now finally back to that even point. And just as we're getting close to what we're in our community, the 50% mark, now we're seeing that affordability, as been looking at all these charts, is just making it very impossible, whether it is in your local community or even finding affordable communities outside. And the mobility is starting to face. So to put it in perspective, I think just from even Q2's numbers, so this is how much of a counterforce that we're facing. So even though compared to the annual figure in 2023, an additional 618,000 households were formed in the Latino community. So that's the largest surge in household formations in history that we have. And yet now we've seen that number has dropped. The only community that has seen a gain at about 4 basis points or 4 basis points there is the white community. All other demographics have dropped in Q2. So unfortunately, because of the way things are, it's starting to decrease now from Q1 to Q2. And so that is certainly, as we saw Chris kind of mentioning, that is that we're reaching that point now, I think, where things have become difficult. So I would say that all eyes are on us putting pressure and knowing that I think that, it's great to have in conversations around down payment assistance, but I think that this problem is going to be one that we can't just throw money at it anymore, right? It is certainly something that we have to address the supply issue from a federal and local level together, and look at different alternatives. So it's not surprising for anybody here that's been in the housing, but but I feel that now it's coming up to those that aren't in housing as a surprise moment, when we've been talking about it for like 10 years, right? So I think that it's refreshing at one point, but also kind of disappointing that those that are in power, legislative power as well, are just now starting to make this a priority. But I think all of us can collectively say this is not a partisan issue. Let's continue to push forward across the board with every one in our communities to say that we're all being impacted as Americans. This is by far one of the most important issues in our country today. I do want to just close by stating a few points, and I'm happy to share this with everyone. I can provide this, Karen, to the group. Last week we released our State of Hispanic wealth report, which really just kind of outlines the important pillars that we're focused on as an organization and how we triple Hispanic wealth. One of the areas I think that are so very important, I think this is just as important, I think, for the Black community as well, which is, you know, this conversation around asset protection. You know, home ownership is certainly fundamental, but I think for those, as we're thinking about sustainability, we need to make sure that our communities are focused on having at simple some sort of will or trust for the assets that they currently have and the protections that we have. The participation of our community within the Hispanic community is very low when it comes to protecting those assets. And so we want to make sure that's going to be certainly a priority of our organization as we move forward. And a new initiative is and maybe something we can all work on together is how do we scale and provide an opportunity for our communities to protect the assets that they currently have. And many are under the myth, for example, there is a myth, right? Well, I don't have any assets to protect. Well, if you are a homeowner, you have an asset that needs to be protected for your community and for your children. So that's one of the areas that I think we can have further conversations on. But I appreciate this time to speak with everyone here, and we are certainly with you as you're working together and providing any data that we can to help you push forward.
Fantastic. Thank you so much for that, Jason. And Chris mentioned several times that affordability is an ongoing challenge. Wendy Penn is here with us from Mortgage Bankers Association to talk about how MBA is attempting to address affordability through its Convergence initiative. Welcome, Wendy.
Thank you, Karen. It is certainly a pleasure to be with you and all who are joining this afternoon. And I'm happy to share some information about Convergence, which, as you mentioned, is an initiative of the Mortgage Bankers Association that we launched in 2020. And it is a collective impact initiative to increase homeownership rates among Black, Hispanic, and other underserved communities. Convergence brings together local stakeholders like lenders, real estate professionals, counselors, local government, CDCs, developers, along with national partners like Fannie Mae and Freddie Mac, CoreLogic, and others who are already working on affordability issues to work together in a way that they haven't before, with a focus on closing 4 gaps that we identified that cause barriers to home ownership, again, particularly for Black and Hispanic communities. The first being the information gap, which I'm sure everyone on this call is very well familiar with. People have misperceptions about the home buying process. They think they need 20% down, or they think they need perfect credit, all the things that I'm sure these counselors see every day, but people will self-select out of the home buying process because of this incorrect information. Also, the trust gap. People are kind of weary of the home buying process, of lenders, of real estate professionals. That goes back to everything from redlining and racially restrictive covenants to maybe seeing a friend or family member lose a home to foreclosure and just saying, you know, it's not for me. So again, people will self-select out because of that lack of trust in the people and the processes involved with becoming a homeowner. There's also a market gap, and we've heard quite a bit about that. Everyone before me has talked about housing supply issues, and we realize that is, in my opinion, one of the toughest of the 4 gaps that we are looking at. So Convergence is really focused on helping local players address some of the smaller infill housing needs, particularly with nonprofit and smaller developers, trying to streamline processes for them, make things easier, help them figure out ways that they can make their projects more attractive to lenders, to really help them have a chance against some of the larger developers. And also the resource gap. We've heard about down payment assistance and other financial needs that people have to close that gap to really get into a home. So Convergence is looking at ways to leverage resources and find new tools to help people meet some of the financial needs that are required to become a homeowner. Again, it's encouraging and also discouraging, I guess, some of the things that we've heard, but it's encouraging in the sense that the messages that I'm hearing confirm that the things that we're working on, that we're on the right path. But again, depending on what you hear, but as Chris said earlier, that gap between white homeownership rates and Black and Hispanic there's a 25 to 29% gap when you look at those differences. But also, if you look at information from the census and the Urban Institute, we're going to see the majority of new household formations between now and 2040 are going to be in the Black and Latino communities. So that gap there in the homeownership rate, but then also the new household formation, there's an opportunity there. There's an opportunity for lenders to reach new consumers. There's an opportunity for housing counselors to reach out to people who might not be mortgage ready now, but might be in a couple of months or a few years. But really developing a pipeline. So that gap, although it can be daunting, there's an opportunity there. And what we're trying to do with Convergence is to leverage existing programs and resources that already exist at the local level, and then match that up with national level resources from partners that at the local level that there might not be access to, and have these groups work together. We are currently in 3 cities. We are in Memphis, Tennessee, Columbus, Ohio, and Philadelphia, Pennsylvania. And the way the work gets done with these initiatives is that we create work streams from from the lenders, the real estate professionals, the housing counselors, the developers, literally get in rooms together or on Zooms together and talk about what the local issues are, along with national partners who participate in these work streams. And they brainstorm, they come up with ideas for new programs and products and pilots. And some of the things that have come out of these efforts, I'll give a quick example from each city. In Memphis, they are actually building houses. There's a housing supply pilot that's going on right now. It's small scale, it's 11 homes, but it's an opportunity for our host organization, which is United Housing, to work with the local community to get some entry-level homes built for owner occupancy. But the idea is once we figure out how can we help streamline the process for United Housing, and then we can replicate some of the learnings in other cities to make it easier for other developers. In Columbus, they have launched a down payment assistance program, gives up to $15,000 in grants to home buyers. It is designed as a special purpose credit program. But what can we learn there that we can try somewhere else? And I want to make sure I note that housing counseling is a requirement for anyone who participates in that program. And the program is administered by a HUD housing counseling agency. In Philadelphia, there is effort to put together a toolkit for nonprofit developers to help them figure out how they can find multiple capital stacking opportunities so that they can find the money that they need for their development projects. And something else that's going on in Philadelphia that I want to highlight that really is happening in all the cities. You heard me talk about the information and trust gaps at the beginning. And I referenced them kind of in terms of consumers, but there's also information and trust gaps with housing professionals, lenders and real estate professionals and counselors. Sometimes there are trust issues there among professionals. And so Philadelphia is really taking that issue head on. And they have put together in the middle of an event series. It's an education and networking opportunity for these housing professionals to come together to learn about programs and products that can help their consumers, but also so they can get to know each other, so that they can work better together, so that they can trust each other. And I think that's a huge piece of Convergence. And it's really not only reaching the consumer, but helping the professionals to work together. So those are just a few examples of what's happening in the cities. But every program, every pilot, every event, everything that we do is a learning opportunity. Because the ultimate goal with Convergence isn't just to help the cities where we're located, but to take all those things we're learning and create guides and templates or case study write-ups so that we can share that information more broadly to either inspire new ideas or help cities replicate those programs if there's not a Convergence in their area. We do have plans to expand into other cities over the next several years, but what we're learning right now is really laying the groundwork for that work that's ahead.
That's awesome, Wendy, and kudos to MBA for taking on the affordability challenge. We look forward to hearing more as we move into the future, what you are learning and what you're able to take away from this great work. So thank you so much.
Thank you.
And then our final guest is Ellie Pepper from the National Housing Resource Center, an advocate for the housing counseling industry and consumers. Welcome, Ellie.
Thanks, Karen.
Ellie, the data covered a lot, and I think we can all agree that the homeownership industry has its work cut out for itself as we move forward. But what do you think are some of the implications for housing counselors based upon what we all just heard?
Well, first, let me say thank you to the entire HUD team for inviting me to be part of this conversation. Of course, I'm always excited to talk about the great work of housing counselors. As has been pointed out, this information really is not news to housing counselors. Housing counselors become even more important in this environment because they support clients who are navigating the challenges by helping them explore financial products and down payment assistance programs that can mitigate the burden of the high costs. Housing counselors are also aware of the affordable homeownership opportunities that might be available in their area. And this is a place where relationships with developers and real estate agents are key for housing counselors. As Dr. Herbert pointed out, high home prices relative to incomes are creating a greater need for down payment assistance. And his research indicates that these programs may have more traction with higher income buyers. The limited supply of affordable homes, particularly at the entry level, poses another challenge here. But housing counselors can be proactive in this way. By beginning to advocate for more inclusive down payment assistance programs. So getting together with your local programs, with your state programs, that these down payment programs that address the needs of very low income families to ensure that home ownership remains accessible to them. So advocating for higher amounts, for the ability to stack, the ease of the application and quick processing are key. We know that sometimes when a home buyer, especially in the current market, is using down payment assistance, it can be a barrier to competitiveness in the current market. But along with this, housing counselors can prepare clients for a potentially longer home search and to help them stay competitive in a tight housing market. All that being said, housing counselors really ought to consider exploring fee-for-service housing counseling as an option, especially with those higher income home buyers who may not qualify for traditional subsidized housing programs. So for example, offering fee-based counseling service can be a sustainable way to support those clients. Having a higher income does not equal having more knowledge of the ins and outs of home buying. And by diversifying their service offerings and incorporating fee-for-service counseling for higher income consumers, housing counselors can generate additional revenue for their organizations, which can be reinvested into subsidized counseling programs for low and moderate income clients. This approach would allow counselors to broaden their impact while still maintaining their core mission of promoting equitable access to homeownership. And if anyone is concerned about how HUD might view this, see Chapter 7, Section 5 of the Housing Counseling Handbook, page 82, to understand how to structure a fee-for-service arrangement in your organization. Dr. Herbert also notes that while there have been recent gains in BIPOC homeownership, these improvements are fragile, and Jason and Dr. Courtney Rose both mentioned this and brought this up. Housing counselors should focus on strategies that help BIPOC clients sustain homeownership long-term, including financial literacy education, guidance on budgeting for homeownership, and accessing affordable mortgage options. I will say that tomorrow, Bruce Dorpalen, the Executive Director of National Housing Resource Center, will talk about using Section 8 Housing Choice Vouchers for homeownership as one such program that can help with this issue. So existing homeowners are facing increased cost burdens due to rising property taxes and insurance premiums. So this is another population that housing counselors can be working with. This trend could disproportionately affect low-income homeowners, making it critical for housing counselors to provide guidance on managing these ongoing expenses and seeking relief where possible, such as property tax assistance programs, which might be available at the city or county level. Also, thinking about helping potential home buyers and current homeowners plan for estate planning, which can help to protect generational wealth. And then additionally, disaster preparedness is something that should be discussed with every home buyer and homeowner, especially those that are in disaster-prone states. One little kind of positive note that I want to throw out there, Freddie Mac data from June 2024 does indicate that nearly 74% of metros have for sale inventory affordable to LMI home buyers, with active listing shares exceeding 25%. And in those places where those active listing shares exceed 50%, it's heavily in the Great Lakes and Rust Belt region. So just something to be thinking about for housing counselors in those areas. And one final thing I want to say, I mentioned it earlier, but I think it's really important. Housing counselors can be a really strong advocate with their local, state, and federal lawmakers around legislation related to building affordable housing, funding for down payment assistance, funding for housing counseling. You are on the ground, you have your ear to the ground, you know exactly what's happening. I often refer to housing counselors as the canaries in the coal mine. You often know things before the rest of us do. And so your insight and bringing with you your clients who are willing to speak about the benefit of getting involved with housing counseling and the needs that they have for becoming homeowners can also be really key. Thank you.
Thank you, Ellie. Those are some great insights. Appreciate that. So I'd like to invite all our speakers back on camera, if you would, please. And I have to express apologies sent by Jason Rivero. He had to drop unexpectedly. But Chris, Dr. Rose, we want to start some additional questioning with the two of you. Clearly, there are some challenges we're facing in the housing industry. But based on the data, are there any areas you're encouraged about in terms of homeownership or where you see opportunities for industry stakeholders? Chris, why don't we start with you?
Sure. I think, Karen, the folks on the panel have done a really good job of identifying different areas for intervention. I do want to give a tip of the hat to Convergence in particular. I think that the way in which that program is structured to look at a whole range of barriers and then have solutions to each of those is really important. Jason highlighted the supply side issues as critical. I know there's been some criticism of the Kamala Harris's proposal for very broadly available down payment assistance as being inflationary in a time when supply is so tight. I think it's important to make sure that any kind of demand side subsidies are combined with those supply side approaches to make sure that those impacts are minimized. But I think it's important to really remember that a lack of savings is particularly important for BIPOC folks. They can't go to the bank of mom and dad because mom and dad weren't given the opportunity to own a home. And if we don't extend that down payment assistance, we're really going to limit opportunities for BIPOC folks in particular to get into home ownership. So targeting will be really important. But this one thing I would point to as this real sign of hope is this real broad attention given to the supply side constraints and the fact that we need to both change regulatory barriers to make it possible to build smaller, simpler homes, including things like manufactured homes, which have a real important role to play as entry-level home ownership. But together with that is the financing tools that are needed to be able to reach those homes, whether it's manufactured homes, homes that need repair, or accessory dwelling units, which can be another way we can get infill supply that may be more affordable.
Love that. Karen, if I could add to that, I appreciate
Absolutely.
Chris's comments on down payment assistance, but I agree completely that you have to couple it with increasing housing supply or it will not work. What we see as practitioners at NARAB is a lot of times our consumers are discriminated against when using down payment assistance. I'm a broker, I have a buyer. We put an offer in on a home and we utilize down payment assistance. We send over our pre-qualification letter and we send over our down payment assistance letter. And a lot of times the sellers don't understand it. They're leery of it. And if it's a competitive market like it is currently, and you have competition, if I'm a seller, my goal is to sell my home for as much money and as fast as possible with as little complication as possible. So if I'm in a competitive situation with a buyer with down payment assistance versus a buyer using a standard conventional type loan, the buyer with DPA is going to lose every single time. So if we don't increase the housing supply, the down payment assistance is not going to work, because we see in these markets that buyers utilizing down payment assistance are a lot of times discriminated against. Again, back to the institutionalized investors. You have a buyer with down payment assistance competing against an institutionalized investor that doesn't need an appraisal, that doesn't need a inspection. It's no way that a buyer using down payment assistance can compete with that. The only way to even out this market is through inventory creation. There was a comment in the chat, I think one of the questions, about can the $25,000 that's being proposed by presidential candidate Harris be used not just for down payment assistance, but can it be used to decrease debt? Can it be used to, pay off things and buy down interest rates to make the property purchase more attainable? I personally think that that's a great idea, because in many situations, DPA is not the number one problem. Our report for NARAB shows number one reason why Black consumers are not approved is high debt to income ratio. They're over leveraged. They're over leveraged for a lot of reasons. Income between white and Black workers doing the same job, same career, is oftentimes less. A Black woman on average gets paid, a Black woman with a master's degree gets paid the same amount as a white male with a high school diploma. That's just facts that in the labor industry, there's a lot of discrimination there. So what happens is the result of that is over leverage, high debt to income ratio. Person has the same, has the same bills of car note, rent, cell phone bills, food, etc., but it's trying to accomplish all of that with less of a salary. So that means they leverage more. So could this $25,000 be used to decrease debt at closing? Could it be used to decrease the interest rate to make the monthly payment more affordable? How do we creatively look at utilizing funds towards home ownership, not just in down payment assistance, because a lot of times buyers are discriminated against when trying to utilize those DPA funds?
Great, great. Thank you both for those responses. And so, Ellie, let's jump over to you. What advice would you offer housing counselors and their agencies based on the presentation that we all just heard?
Well, it's so difficult on a day-to-day basis to watch somebody who's been working so hard to try to become a homeowner bump up against these issues that are being talked about, whether it's lack of down payment, whether it's a discrimination based on race, whether it's lack of affordable housing. These are all things that housing counselors see every day in their work. And I think it's important for housing counselors to remember what great work they're doing and how important it is for them to continue to work with potential home buyers who are experiencing these issues, because housing counselors are going to be able to really support people through the process and let them know about what's available and what are the best ways to make use of what's available, right? And I want to kind of go back to this idea of really working closely with your local real estate agents, working closely with your local nonprofit and for-profit developers to find out what are they offering, what's available, maybe figure out how you can partner, help them understand what would be needed to meet the need in the populations that you're serving as housing counselors. And additionally, really working with your local, state, and federal lawmakers to make them aware and understand the importance of supporting home buyers who are at a lower income strata and having more trouble finding affordable housing. And I love that Dr. Courtney Johnson-Rose keeps bringing up institutional investors, because that is really an issue, and it has been brought up in the lawmaking space. And I would say that it is something that housing counselors and their clients can continue to talk to their lawmakers about to help, bring about some changes. There's been some pushback on all of this, and it would be really nice to see something more to make it more accessible for lower income home buyers to access the market.
Okay, great. Thanks, Ellie. And Wendy, the Convergence Initiative has garnered some excitement here. So what would you say to housing counseling agencies that are interested in learning more about the initiative?
Yeah, thank you, Karen. Hopefully it came across that the wonderful thing about Convergence is the collaboration. And as I mentioned, we're in 3 cities right now, but the work that's happening, the relationships that are being built, the ways that people are collaborating in a way that they didn't before, is something that could be done anywhere, even if there isn't a Convergence initiative. So there is information at nba.org about Convergence. But as I mentioned previously when I was speaking, all of the pilots, the programs, the things that are in place in the 3 cities, we are actively working on writing up case studies, creating templates and guides so that those programs can be replicated in other places or inspire people to do similar work. That's something that we're probably a good 6 months or so down the road before we would have something that we can publish on our website. But that could be a guide to inspire people to work together. I can't emphasize enough the importance of the relationship between the lender, the real estate professional, and the counselor, which I don't think probably comes as a surprise to anyone on here. But building trust and sharing information is essential. And so that would be the one takeaway I would offer to housing counselors, to really, be I don't know, forceful is not the right word, but make sure that lenders know who you are. And if a program's not working, let them know. We had a great session in Columbus where we had a very candid discussion with lenders in the room. We partnered with the Columbus Board of Realtors and the Columbus Realtors to have a dialogue about, okay, so you say this program is supposed to work this way and do this, but this is the challenge I keep running into. And so counselors were giving feedback, the real estate professionals were giving feedback, the lenders were listening. And it might not change every program, it might not fix every issue, but having an open dialogue like that is really the starting point. And so I would encourage any counselor that's interested either in Convergence, the program, or just the kind of the concepts behind Convergence to really start having those direct and candid conversations with their housing professional colleagues.
Awesome. Sounds good. So thank you again to Chris Herbert, Dr. Courtney Johnson Rose, Jason Rivero, Wendy Penn, and Ellie Pepper for sharing with us today as part of this enlightening conversation. And thank you to our audience for your time and attention. We're just about out of time, so I'll pass it back to Lindsay for the wrap up.
Great. Thank you all. So many great questions. And I just want to encourage folks, we'll be paying attention again to the community boards and CVent. And a lot of the questions we've seen around the NAR settlement and fee-for-service opportunities are topics that we will be addressing in our sessions over the next couple of days. Coming up today, please join us back at 2:30 for Let's Make Home the Goal. And then at 4 o'clock, we'll have our session on housing counseling model industry standards. And we'll be wrapping up today with a fun HCFAC bingo with the 2024 Federal Advisory Committee at 5 o'clock. So make sure to come join us for some fun to wrap up an exciting first day of our conference. So thank you all for joining our session. Please see us on CVent, and we'll see you at our next session at 2:30. Take care, everyone.